Good morning. Hello, everybody. Welcome to XM live trading session in the beginner's room for risk management session with me. My name is Junaid Vahid, trader analyst in Forex and Structure. Started trading back in 2011 as a full-time trader. I'm using price action intraday and swing trading style for my trades. I do analyze fundamentals, price action, and sentiment. So try to do well-rounded analysis in order to have higher probability on my generated trade ideas. So that's actually the question. How do we generate trade ideas? My way is price action fundamentals for trade ideas quite rarely, but fundamentals are helping me always to be in touch with the context and not to start hallucinating some situation where there might not be the correct directions or patterns. So that's simply about the way I do trade. This session is designed for risk management. So as I always point out that I believe the risk management is the most important aspect of for trader to become successful. Nothing else, no accuracy, no price action. Nothing is better than we study in deep the risk management. So we know how to manage the risks. We know what makes the money in the financial markets. That's actually also a little bit feels like contradicting or strange. Not everybody can understand what it would mean to manage the risk. Like risk management means that we are taking risks and we are managing them. We try to avoid high risks. We try to hold, first of all, people say what we have, so we not lose money, and then we start making money. How that's possible with risk management that I'm saying we can make money? That's crazy. Is it possible that when you are trying not to lose, actually to make money? How that works? This is actually one of the really questions many beginner traders are asking themselves because they don't solve the puzzle of what is actually risk management. In simple way, risk management is the way to protect your capital from large losses. That's what everybody believes is what is risk management. It helps you control your emotion and maintain discipline. How it's possible that you are not risking big, so you don't have big emotions. You are risking small that are not engaging so much with your emotions, not triggering some fear or greed there. And you are just having low emotions to minimizing to zero emotions while managing the positions. Then you can say if you are risking small, how you can make big. Well, that's also doesn't feel like very promising, pretty promising, right? So I'm going to risk really small. Think about $50, $10, $1, $5, $100, depends on your how big your account is, and how we can expect to make the money that will help us to achieve our dreams, goals, the Lambo. Let's say, how it's possible that it's not possible, right? So the low risk, people directly connected to the low reward. And in a nominal way or in a simple trade way, yes, that's absolutely true. So if I have to teach you to become trader in a basic way, still successful approach, then this is the way that I will teach you. Low risk, not so big profits, constant rising, account is getting bigger, then you will improve your, increase your risk, and etc. Long-term success. Giving you a quick example, I'm going to use this part of my screen. If I find my brushing tool here, yeah, I will. Okay, so look at this. Let's say you have $1,000 account, right? $1,000 account. So how you can make money with $1,000 account? If you want to double this account, there is way to double it. Number one, risk all, all or nothing. Okay, you are risking huge. You are losing your entire account, or you are doubling your account. That's the gambling way, but it's a way, right? We can't say that it doesn't exist. It does exist. So you risk huge risks like full account risk. If price goes in your direction, you make the money. You double it. If price goes against you, you are losing your account. If that's all you had, you bankrupted. If it's part of your small piece of your money that you can risk, it's okay. You just lost an account. But that's one of the way. Risk all lose all or double it. Okay, this is one of the way. I don't recommend that. Bang, wrong. The other way, small steps, small wins regularly for a long period of time. So how much is going to be some kind of a risk that we can take per trade for $1,000? Let's think about that. $1,000 is not much. People talk about 1%, half a percent, 2% risks here. It doesn't matter what's the account. Since they say risks around 1, 2% per trade, nobody's asking how much is your account. What about if the account is $10 billion? So risking 2% per trade is serious risk. Just talking loudly, nobody with so large accounts, with multi-million accounts trading CFDs and leverage trading, of course. But it's important to note how big our account or small our account is so we can define what could be our risk appetite or tolerance. We have been talking a lot about risk appetite and risk tolerance. I'm not going to dive into there. It's a complex topics. It's something that you guys will decide. The more you learn, the easier it's going to be for you to decide your general risk tolerance, risk appetite. You make the difference between them. Okay, we have studied that in the previous risk management sessions. So let's assume that we're going to go for 2% classic risk. Not that I like it, not that I recommend it. I'm just using it as an example. 2% for $1,000 account is going to be $20. 20 bucks, right? Boom. You go have a coffee, boom, you're done. No money. It's just one trade. $20 of single trade. Risk per trade, okay? $20 risk per trade. Per trade. How much you can make when you are risking $20? How much you can make when you are risking $20? Well, if you are using if you are making the same amount that you are risking, you will make plus $20. If you are looking twice more than what you are risking, you will make $40. If you are looking for 5 times more than what you are risking, then you can make $100. Can you become ultra wealthy with these numbers? No. Ultra wealthy can be actually different like successful in trading can be different for different traders. Somebody will feel that successful by making these profits in a long period of time. The problem here is that not every time when you are risking $20, you're going to get 100, you're going to get 40, or you're going to 20. So sometimes you're going to lose multiple times by 20. So you're going to lose consecutively 3 times by $20. Well, you're going to lose $60. Okay, it's going to be minus $60 for you. Okay, but let's assume that you are a successful trader because you are doing great disciplined trading, systematic approach. You are doing your price action trading, indicator-based trading, whatever, sentiment-based, statistical trading, whatever you like. So there are so many different approaches. It's also a topic, but for different session. Again, related to risk management, but for different sessions. So we don't lose time with that. Just make sure that you are joining the next one in the next week, next Tuesday, 1 p.m. You're going to learn a lot of information about that. All right. So let's assume we are profitable. We are not losers. Sometimes we lose, but sometimes we win. And the more we win, the more profits we get into the account. If we are having 10 trades, like we're going to divide them equally, 5 losses, and 5 wins. Let's on average say we make $40 to $60, let's say, per trade. 5 times we lose, so we lose minus $100 here. And let's say we make plus $5, 200. Let's say 2 times we made 60, 3 times we make 40, 120 and 120, 240. $240 we made overall. So this is going to have $120 move for the account, which is plus 12%. Like you do that in 10 trades. People are looking to make this with large investments for a year, which is a significant profit. For trading, it doesn't look much money-wise and percentage-wise not satisfying because $100 cannot make anything, cannot pay the bills, cannot do anything. You just go out and this money is gone, okay? So that's why it feels small. But the reality is that if you want to look double, triple accounts every single day, this is impossible. Technically, people can say, yes, Theoretically, it's possible, but practically, it's not because nobody can make only profits every single day. Okay, so 12% for some period of time. What we can say, in what period of time we can do quality, high quality 10 trades, where we have 5 high quality stop losses and we have high quality 5 wins. Let's say in a 1 2 weeks period, right? Maybe you say I'm not so high frequency trader. I do only best sniper trades on the bigger time frame. So that's a monthly profit. Monthly profit, this is extremely nice. But at the end of the month, you have $1,120 that you need to start the next month. Do you have some extremely great success? No, you don't. So what do you need to do? Now, your 2% risk, it's coming from $1,120, not $1,000. So we need to calculate how much is 2% from $1,120. It's going to be something like 22.2, like $22. Okay. So 2% is going to be like $22. I wrote the percentage in. Anyways, $22. So for every single risk, now you are taking $2 more risk. 10% you are increasing your risk per trade, but it's the same 2% per your move. Why is that? Because you gained your $12 account, 12 percentage gain. So here, the expected amount of profit, it's 20% to 100% more. Like, why is that? Because if you make 2 times bigger profit here than what you are risking, you're going to make $44. Now, if you make 5 times bigger profit than what you are risking, you're going to have $110. So you're going to have 10% more success. Okay, which in 10 trades, it can add up like 100 dollars more. So it's actually a dollar, not percentage, sorry. So you are increasing this 10% for the same thing you have been doing. It's a 10% add-on on the profit per trade, which can actually increase gradually, compounding logic, your success. Then let's say you did the same five losses and 5 profits. Then 5 losses, you did here 110 loss, 5 profits, 43 times 40, how much? 44. This makes 120, 132. So you have 132 plus, let's give 60, 66 twice, 124, 124. Overall, we're going to make $256 of profit on our $110 of loss. Minus, so plus 256, this is 110. Then what we have, 146 in money. And the next month, you're going to start again with 1,266, $266 in the money. Did something big change in your account, guys? You make 26.6% gain, 26.6% gain for the 2 months period. Is it a lot? Absolutely not. Can you live with this money? No. So can you make way higher percentage gain here? Maybe, but how? You are looking for accuracy, win rate, or you are looking for high risk to reward ratio. There is no other way to increase the profitability here. Huge risk to reward, meaning for every single dollar you are risking, you are looking to make, let's say, 5 to 10 to $20 of gain for every single trade. Or high win rate, you need to know that you know the future. You need to know the future. Can you know the future? No. That's why what we do, risk management. Nobody knows what's going to happen in the future. Market is random for us. To us, market doesn't care what we believe. Market doesn't care about patterns, our patterns. Market doesn't care about anything. We believe that market cares about our thinking. We try to read the market's psychology throughout the price, the patterns, the technical indicators, the fundamentals. But in reality, our belief or what drives the market can be completely different. So